You are watching the Morning Scramble. Later in the show, we're going to be talking about corporate personhood and also pre-Barbie dolls. We're going to be all dolled up for the doll show and sale. But first, we're going to talk about real estate. Is it time to buy? Is it time to sell? Is it time to hedge? What do we do right now in this risky market that we are experiencing? Ken Beckrich, Online Trading Academy, and Greg Markoff is a realtor in the Valley, I understand, Greg.
Yes.
Yes, and you are with?
HomeSmart.
Okay. Ken, you've been on the show a number of times.
Yes.
We talk online trading. We talk all the inside information. You have the scoop for us usually. When it comes to real estate and investing right now, where does that rank in your list?
Well, for me, it always, I personally don't like real estate as an investment because if you make a mistake,
Greg, he's not
I'm sorry.
Coming into your office.
That's true. But if you buy a stock and you realize you made a mistake, you can sell it in seconds. You buy a piece of property and you made a mistake, you have big transaction costs, all due respect. You're in this thing for a long period of time, you can really get hurt. And there's a lot of extraneous factors that can cause you problems. Interest rates go up, tax policy changes, what happens in the macro economy. So if you're going to own a house, I got no issues with that, but I think as an investment, it's not the world's greatest investment, and in either case, you need to protect it.
Greg?
I think it comes down to education. I love the story, and I've heard this story attributed to Carnegie, Rockefeller, whoever. He was getting his shoes polished, and the guy polishing the shoes started giving him stock tips. That's when he went, sold his stock holdings, and this was right, of course, before the great crash in the 30s. It comes down to knowing what you're doing. Real estate has been historically a fantastic investment. You need to know what you're doing. If you're investing purely on speculation, you could probably get burned just as bad in stocks.
Does it also play into factor, you have the money, do you have the resources that you can put it into that piece of property and sit on it? Are we looking at each individual situation?
Absolutely. I think what we're seeing right now in the Valley, and actually around the country, one of the things I do is teach real estate classes around the country. What we're seeing right now is savvy investors. About 40% of transactions happening right now are cash. That's big money. Big money is moving right now, and they're moving into real estate. Why? Because the return on investment is unprecedented. And we're seeing that, especially in the Valley right now. That's why the demand is so high.
Ken?
Yes.
Is there such a thing as a diverse portfolio, maybe some real estate and some stocks? If you so choose.
If you so choose, yes, but I would absolutely agree the education is the key, and I understand, you know, what I do, but I will say that the most important thing, if people are going to invest in anything, the market's going to be very volatile, I think, for real estate as well as stocks potentially going forward, and there are ways you can protect yourself. You can use options even on real estate to lock in prices so that you don't take a big hit if it does go against you, and I think that's absolutely crucial, and that's the kind of thing we try to teach our people as well. Education is the basis of what we do, and this is the whole thing. Whether you're in stocks, you're in real estate, you're in anything, if you don't know what you're doing, you're going to get killed. And so learn it or stay out. That's my general advice to everybody.
I was talking to a friend, and he said from an investment point of view, if you're going to invest in a stock and you have limited funds, then you just use that money and invest in stocks. If you invest in real estate, you can use that limited amount and sort of leverage it and have more gain, but possibly more loss. Does that make sense? I mean, do you understand that philosophy?
Sure. I think real estate is a unique vehicle for investment, although I would agree with Ken, it's not the best vehicle for investment, especially for people who don't know what they're doing. But real estate's unique. You can leverage it, and you can receive rental payments. You can start receiving dividends off your real estate investment almost right away. And is the real estate market going to be volatile? Sure, I think it's going to be volatile. But me personally, when I have, let's say, $100,000 to invest, and I am just about guaranteed to be making 10 to 15, at times 20, 25% return on my investment, I don't care what happens to the value of that real estate investment, because that's not what I'm investing. What I'm investing in is the monthly cash flow. And right now, those numbers are absolutely phenomenal.
That is a very good point. Gentlemen, I see that both of you have a crystal ball. I know you do. And you can tell me where stocks are going, and you can tell us where real estate are going. I know you have all the answers right there. But let's pretend like we have a crystal ball. In your expertise, where are stocks going?
The rest of this year, stocks are going down. And I will tell you,
Does that include gold? Because gold dropped a little bit.
Gold is actually way up. It depends on what the Fed does. I mean, basically, that's a flight to safety. The market's way down today, and the market's going to continue to go down because we're not going to resolve this tax issue before the 1st, and people are going to get scared this fall. The debt ceiling debate's not going to go anywhere. There's going to be a lot of factors, probably starting no later than September, that the market will drive down. But I will tell you, you can get tremendous leverage with stocks and futures and other things as well. And I will argue that this week I'm up about 30% in the last 3 days just because I bought puts on the overall market, which is the same thing you can do with real estate. If you think real estate's going down, there's flexibility and all these things can have a place, but you got to know what you're doing. But it is my firm belief that there'll be volatility, but markets are going down.
And I just thought of maybe a compromise, if you will. REITs, are those investments that invest in real estate projects?
They are, but then you have the flexibility that you have with stocks. You do have liquidity that you don't have with an individual property. You can get some amount of cash flow out of them, but you get a big rise in interest rates, you get other things, you can get whacked. Our view is that you want to understand where the smart money's going. And the Joseph Kennedy, analogy you drew with the shoe shine, that's absolutely true. But if you can learn to understand where the institutions are buying and selling, that's where you make your money.
Hey, Greg, interest rates have been dropping. They just released, I think it's down to 3 3/4. For a 30-year fixed. How has that affected investors in real estate over the last year or so?
It's absolutely. But I thought, Ken, I thought you told me you're all in on Facebook.
No.
Oh, okay,
no,
okay. That must have been somebody.
We told people no Facebook.
That must have been somebody else. Look, here's the deal. The investment rates are down. Phoenix real estate market, let's talk about just Phoenix right now, is weird. My good friend Mike Orr called it an unbalanced market. He works for ASU, so I think he has to use big terms, but unbalanced is a soft way of saying it. It's crazy out there. If no new property gets listed starting today, we're going to be 100% sold out of our entire inventory in 21 days. That's unprecedented. Wow.
Now,
the inventory is low.
This is the entire metropolitan area.
This is the entire valley. Absolutely, single-family homes. Now, here's the deal. Economics are extremely complicated. You start looking into derivatives and other things, they can get extremely complicated. But two things stand and have stood the test of time: supply and demand. When the demand is this high, and the demand is very high right now, I would much rather have my money in real estate than in stocks. Why? Because I could be making 10, 12, 15. I have a property where I'm making 25% return on investment. That's pretty good, right?
But I'm up 30% in 3 days.
Right, but 25% consistently, and this is not leveraged, right? Yeah. So when you're seeing these kind of numbers, and when the rates are as low as they are, historically low, real estate's on sale, the money's on sale, yes, the demand's going to remain high. What's happening right now, this is our problem, appraisal issues.
Right.
Banks have overreacted in the other direction, and they're not lending the money. Yes. As soon as that block is cleared, and it will be, banks want to lend money. As soon as that roadblock is cleared, there's only one way the prices are going to go, and that's up.
Don't get me started on banks.
I don't want to get started on banks.
The last 10 or 11 years, they would give you a loan for anything, and then I tried to sell my house in California to move here, and I did an inspection. It passed. I did everything. Bing, bing, bing. In 15 days, I got everything done, and then it came to the appraisal.
Sure.
And I almost lost the buyer because the appraisal came in lower when 3 months ago or prior you were given.
Banks are weird. One of the things I've done recently is looking at the big picture. My work in the past 5 years has been in pre-foreclosures, short sales. That's what I do. So one of the things I've done is wrote a book. It's actually called How to Short Sale Your Arizona House, and you can find it for free at ArizonaShortSaleBook.com. Why? Because there's still a huge need. About 50% of Arizonians are underwater, and a lot of those people need to make a move. They need a solution. It's still needed, and now's a good time. So absolutely, banks are going to remain a big issue.
Yes,
Thank you, Greg.
Ken, as you have always said, I'm understanding the underlining thing with both of you gentlemen is education.
Absolutely.
And you have said it.
Know what you're doing, or you're going to get burned.
Don't we all wish that bailout money had come to us?
I wish it stayed with us.
Oh, stayed with us.
That would have been, get out the middleman. Let me keep my own money.
Thank you, Greg. Thank you, Ken.